Hello, everyone. Welcome. Lex here from Scepter, together with Darren from Ēnosys. Welcome, Darren.
Thanks for having me. Glad to be
Gr-
here.
Great to have you back. And today we are going to look a little bit into your origin story, Ēnosys, and any other protocols that you might be working on. So let's get right into it. Ēnosys, where did the name come from?
The Ēnosys name, so we originally launched on the Songbird Network as Flare Finance way back in the day. And that focus was because, most of what we build is intended for the Flare network. That's what we built around was the tech that they were building, and we intended to have that be our main focus. Over time, we started to kind of expand outward a little bit and do some things off of the Flare network, even though it's still our main home and main hub. And so we thought that a rebrand to something that was less Flare centric would make sense for when we did those off of Flare things. Our kind of ethos as a company has been to not launch products under different brand names when we branch out, but to actually have everything under one umbrella. And so Ēnosys was kind of the culmination of that to allow for a broader multi-chain kind of economy to be built out of the brand without having to launch new brands every time we went somewhere else.
All right. So Ēnosys is an umbrella name. So what's underneath that umbrella?
Well, we've got a number of products. Let's see. Let's start from what's on Flare right now. We've got a V2 DEX, which is based on Uniswap V2, as well as farms for that. It sees less usage these days because most of the incentivization has been moved to our V3 DEX, which is the CLMM that we run, the concentrated liquidity market maker on the Flare network. We have most of our liquidity there, most of our activity there. We also run the Ēnosys Bridge, which is a bridge connecting Flare and Ethereum. For the main part, we also connect Songbird with Ethereum and the XDC network. We built that bridge to be kind of a gap filler. This was back before Flare or Songbird had any bridges to them. And we were trying to connect communities, trying to bring some extra liquidity on, allow Flare users to access some of their other liquidity on chain. Since then, obviously Flare's expanded out with the Stargate bridge that they brought on, and now we have F assets. So the bridge sees less usage than it did. It's still there. It still has the ability to expand. Kind of main use case being again to connect some of those smaller chains that might not see adoption from the larger bridges. We also have we just recently launched governance in the APY cloud. I'll get to those a little bit later. We run the Ori multi-sig wallet on Flare and Songbird, which allows users or teams to have multi-sigs that they can actually build products out of. We have Gallery on Songbird, which is our NFT marketplace, which also hosts two protocols, the Ēnosys protocol and the Clover protocol. The Ēnosys protocol is a real world redemption protocol. So you're able to end-to-end encrypted redeem your NFTs for real world items where your personal details are encrypted on chain and can only be accessed by the shipper. We built the Clover protocol, which is a kind of fair distribution protocol for NFTs, allowing sort of events to be run that'll help distribute NFTs. We run DeFi Oracles, which is our data provider and infrastructure on Flare and Songbird. So that's our FTSO data provider, that's our FDC and our validator. We also run we're launching loans on Flare soon, which will be the first XRP backed CDP, allowing XRP holders who have brought their XRP over as FXRP to access the value of their FXRP and Flare to mint a stablecoin, effectively taking debt against that collateral that they're fully in control of, both from the repayment schedule and the interest rate that they're paying. And then they can take those assets that they've minted and use that to either use the value to pay for things. They can use that in DeFi itself. It just opens up a way to access the value of your assets without having to sell them. And then we run Scopus, which is our blockchain indexing and analysis suite that we use to run most of our indexing for our front ends. And then finally, we have governance in the APY cloud, which we just launched on both Songbird and Flare. Our governance system is going to continue growing, but the idea behind that is that we wanted to build a governance system that actually has control of things rather than just a vote on things and then the team will do them. So we built it in a way that we will and can pass off control of the actual contracts themselves, so that governance allowed changes can be made directly by governance without any involvement from the team itself, making it fully decentralized and fully in our users' control. And that is supported by the APY cloud, which is the culmination of everything we've built that is a yield aggregator system. It takes fees from every product that we have on Songbird and on Flare and the bridge and other places, and it aggregates them all into one place, which provides incentives for governance, staking, and voting. So effectively, if you are staked in governance with our governance assets, you are earning a portion of the fees from every product that we have, thereby aligning incentives between the team, governance, and users to try to maximize that value through fee structure and through volume.
All right, so that's quite a list. All right, that's a long list, but you've been around for a while on Songbird and Flare, and basically from the very start, as I understand it. Where is Ēnosys and Ēnosys in general? Where is it at the moment? Like where do you
like in
not in a location sense?
Okay. Yeah, I mean, we've deployed almost everything that we intended to originally. There are a couple products that we had thought about in the very beginning that were on our roadmap, such as mutuals and our insurance product, that are probably not on the roadmap any longer. They just don't make as much sense anymore, especially things like the mining, which back when mining was really big, it's not so much big anymore. It's kind of been owned by very large players at this point, where the profitability for small miners is just not there. So things like that probably won't come to fruition anytime soon. Maybe in the future, who knows? But we're pretty close to being done with everything that was on our original roadmap. And at that point, all of that will be hooked into the APY cloud, and it should be a self-sustaining flywheel of a DeFi suite at that point. And then we get to do some of the more fun stuff that we've been having to push to the side while we focus on building out the serious tech to get things running. We get to have some fun with NFT stuff that we've planned for a long time. Things like our DeLorean NFTs that we've got drops and things like that that they exist and they are coming. They just haven't been a priority while we've been, building through, I guess, multiple bear and bull markets now, trying to get everything up and running in a way that would be ready when Flare hits its stride. And then I've got a whole list of protocol ideas that I've written up over the years that are just waiting for their moment to be worked on and built out. So we've definitely got a never-ending roadmap, but as far as the public roadmap, we are close to finished with that.
All right, so that's quite far along in the ideas, at least the ones that you've shared. Then I guess some of the newer things are the stable that you're coming up with. Do you want to say anything more about the API cloud, or because that's one of the major things that you've just
Yeah, we can. So yeah, we launched the API cloud on Songbird a little bit over a month ago. It's been running well. We launched it on Flare a couple weeks ago. Saw pretty good success with the assets coming into governance. We topped out at a little over $3 million worth of governance assets staked in governance, earning, I think it's been a pretty consistent 20% APY. Since then, the APY cloud is intended for um, sustainable real yield. So it's all real yield because it's all coming from fees from our products. It's not based on some sort of token emission. This is all real fees that are being earned. Um, and it's targeting a 5% to 35% yield range. It that's the normal range. It's got a stressed range below that and an excess range above that. Um, if it if the yield dips below 5% for too long and it's in the stressed range for too long, then it starts to pay out from reserves. Reserves come from two places. One is token reserves that were initially allocated, and the other is from excess periods. If the yield goes above 35%, the excess above 35% is stored. It's stored so that when we dip below 5%, it can pay the excess to maintain the 5% for as long as possible. If excess is above 35% for 90 days, we actually go into an excess period where the yield can go up higher than 35%. So it's intended to be bounded, to be realistic, because obviously DeFi yields sometimes get incredibly unrealistic, usually for very, very short periods of time, which means they were never really real in the first place. It was just a function of math being out of balance. So we're trying to avoid that and keep things reasonable. Um, so that's supposed to be a sustainable system that lasts as long as people keep using the products and grows as the products grow and wanes as they wane. But the idea is that you can have certain products that are more successful at certain times and kind of carry the weight for the other ones. So the entire suite doesn't have to be roaring the whole time for things to go well. You can have a bear market dip that causes some liquidations on loans and creates a lot of volatility, and well, now you've got great fees that are coming in, versus the other side, you've got fees in the other direction when things are going really well. So it's intended to be a balanced system that just really shines during volatility more than a bear or bull market.
All right. So why should the Flare community care about Ēnosys?
Yeah, I mean, we've been here for a very, very long time, so I would want people to think about the fact that we started before Songbird was even conceptualized. So the company and the brand itself started before Songbird was a thing. Was the first, builder to build anything on Costin. Was the first builder to build anything on Songbird. Was effectively the first builder to build anything on Flare. We've been here. We've consistently built, regardless of what the market was doing, what the sentiment was doing, what anybody else was saying. We just keep building. As far as I can tell, we're going to just keep building, regardless of what's going on now. Even if we go through another bear market, we'll be here building through another bear market. We have no intention of stopping, slowing down, going anywhere. And I feel that we've gotten the products and the suite to a place where it can sustain itself. It's providing value, and it's providing tools that have their own sort of unique characteristics to them that make them different than what you can get elsewhere. Even though they may be similar, we try to put our own flavor on things that from a technical side, not just a UX side, but actually we try to build something technically different about each thing that we do, that kind of makes it stand out or serve a little bit of a different purpose. But I would say that yeah, if you haven't looked at what we've been building lately, I would take a second look. If you've been influenced over time by the absurd amounts of FUD at times, I would take a second look at what we're building. I think it doesn't really matter what we say, but if you look at our track record, we've consistently built, and that's all we can keep doing. We don't control token prices, we don't control volumes or flow or any of that. All we can do is just build things and put them out there and try to make them something people want to use. And that's what we've been doing, and that's what we're going to keep doing.
Yeah. Well, I think you touched on this quite a bit, but what is unique about Ēnosys?
Yeah, I mean, I think that's really it. Is that we have done a combination of building products from scratch, like governance in the API cloud and our bridge, and also taking products that others have built, such as DEX v3, which is a fork of Uniswap 3, and loans, which is a friendly fork of liquidity v2, and we've tried to add our own flavor to those, such as on DEX v3, we built an incentive system that's actually automated, that runs on contracts. It's all on chain. It doesn't use any off-chain data, for our incentive system there, that allows us to incentivize active liquidity, that has led to us having some of the tightest liquidity curves that I've seen in a concentrated liquidity DEX, where we generally have upwards of 35 to 40% of our total liquidity within like 5% of the active price, which is very, very tight, which gives us much deeper liquidity per TVL unit than basically any other DEX I've seen. I think that goes underappreciated, but as we get bigger and as Flare gets more active, I think that will come to the front more and more, as our fees start to quickly outgrow our TVL. But yeah, I think that our special edge is that we put everything in one place. It's all in one product suite. It's all tied together. It's all feeding one flywheel. We're not launching different products under different brands with different tokens. We're keeping it consistent, building consistently on one base. We're not out there chasing grants and chasing token drops and any of that. We're just building. And we've got the foundations laid, and everything from here is just building up on that.
All right. Thank you for that. Definitely take a second look. If you have taken a second look some time ago, maybe take a third look. But it sounds good. And just to get back to the deep liquidity within a very small bandwidth, I'm like, as a I guess I'm not a complete idiot in the area, but I would say that reduces things like slippage and such.
Yeah, so it reduces the price impact of trades.
Yeah.
So on a V2 DEX, which is what classically was out there, we have a V2 DEX, like Blaze Swap on Flare. It's the same thing. Basically, that's a full range DEX where all of your liquidity that you put in is being traded on the full range possible from 0 to infinity. On a concentrated liquidity DEX, you're able to define your own trading range that you want your assets to trade in. So you can trade, like you can have your assets trade in a very tight range that's within pennies of what the current price is. You can have it trade on a 10% spread, 20% spread, whatever you want to do. The more concentrated you are, the more risk you're taking, but also the more fees and incentives that you earn on our DEX. So that's kind of how that works. So the way we've built it is to incentivize tighter and tighter liquidity. Our LPs take more risk, but are rewarded more for that as well.
All right, good. I'm happy that you confirmed that I'm at least not a complete idiot. Since we are getting to the end of this one, is there someone or a company or a group that you want to make a call out to?
I mean, I think the Flare network has been like one of the things I like about this network is that everybody seems to be pulling in the same direction. All of the builders, the network itself, the users, everybody's pretty much pulling in the same direction here, and that it's not just a bunch of hype. That we're excited for the new things coming out, and we're pushing new tools all the time. Like I can see the growth path, and I think that's been driven a lot by the Flare Network team themselves. I mean, Hugo's done a good job of kind of riding through a lot of talk for a long time, and just keeping building and bringing in partners like Centaura and Firelight, having you guys come in and do liquid staking. That's great. Kinetic's got lend to borrow. We've got multiple dexes. We've got perps. We've got bridges. I mean, we're right on the cusp of so much, and everybody has been pulling hard for that for a long time. But yeah, as far as specifically, I think that really our infrastructure providers, our FTSO data providers have been doing great work for a long time now. Yeah, I'm just excited to see all of us succeed and see all of this start to grow. It's going to be fun.
Awesome. All right. Thank you, Darren. Thanks for coming in again and telling a little bit more about the origins of Ēnosys and all the different aspects underneath that umbrella. Quite a list. I also want to thank everybody who is watching for watching, and see you all next time.
Thanks, everybody.